Awesome. So thank you, everyone. We are back again, and I'm pleased to be moderating this particular panel. And in case you are just joining us, I would like to introduce myself. I'm David Izuogu. I'm currently doing a PhD in computational chemistry here at Cambridge, and I happen to also be the founder of the Africa Organic Dream Initiative, which is a charity that is looking to empower young generations in Africa through education. So I'm going to be moderating this panel today. This is going to be our first panel, which is a business panel. We'll be looking at assessing the investment landscape in Africa. But before we get into that, I just wanted to kind of lay a foundation of what we'll be talking about today. If you look at investment landscape in general, there are two ways investments can actually enter a particular country or continent. One is you having companies that are already founded outside the country or continent, bringing in their own presence within that continent. Then the second is you having companies that are starting up within that particular continent, in this case, Africa continent. And then this company that you are starting within could either be started by those in Africa or people who are actually Africans themselves. And most of the conversations we are going to be having today is going to be dwelling on these sets of people, the entrepreneurs, and how they can access varieties of investment in Africa, while also looking at the foreign direct investment that has entered Africa and where they are coming from and all of that. Okay, so but before we dive into the conversation, I would like to first of all give my panelists the opportunity to introduce themselves. And before they do that, just mention so that you know why we are bringing in the people we are bringing in, their background and all of that. Selam have a very strong background with venture capital investment, because if you look at entrepreneurship, the journey of an entrepreneur, you see how that goes. You conceive an idea, then you try to build a team to run this idea with, and then at some point you need to find fundings, be it seed funding, Series A to E, whatever it is, in order to grow your business. Then at some point you might want to exit, then the private equity firms comes in and all of that. So Selam has that strong background from the entrepreneurship support and the venture capital side of things, while Carole herself has over 21 years experience when it comes to financial things, especially the private equity side of things, mergers and acquisition and all of that, supporting multinationals. Okay, so that's all I have to say about them, but I'll give them the opportunity to introduce themselves before we get started. So, Selam, you want to go first?
Yeah, sure. Thank you so much, David, for the intro. Super excited to be here at this panel today and with Carole. Looking forward to the conversation. Yeah, like you said, I work at a venture capital, very early stage venture capital firm called Antler. I am a director here at Antler for more than 2 years now, and the team that opened the Africa office back in 2019. My background is in engineering, actually. So I studied electrical engineering and my bachelor degree, and then my master's I did communications engineering, diving deep into human-computer interaction and design thinking for tech in Finland. I'm originally from Ethiopia, but I am currently working in Kenya with Antler.
Awesome. You are very much welcome. I'm looking forward to engaging this interesting conversation about investment landscape within the continent. Carole, can we go over to you?
Yes. First of all, let me remove my mask a little bit. COVID cannot even reach me virtually. Just for you to see me. Hi, my name is Carole Ramella. I'm originally from Cameroon. But I've been living in Ghana, in Accra, for the past 10 years. And I set up GFA Consulting, which is a fundraising advisory company. And I support African businesses, whether in Ghana, Cote d'Ivoire, right now what you have, Uganda, Congo. So I support them getting the funds to increase or develop their operations. So I help them become investor ready. I help them structure a business plan that is credible, and then I source money from private equity funds, from banks, so that they close the transaction successfully. I will have to go back to remove my video because of the quality of the network, but that was just to give you a quick introduction and for you to see my face before I go off. So we're really excited to be part of that conversation.
Awesome. We are really excited to have both of you here. As you can see already, yesterday we talked about private and public partnership as one of the first business panel that we had, where we started looking at the role that states usually play when it comes to attracting investment, creating employment opportunity, and all of that, developmental ideas and the rest of them. So, but today, like I said, we're going to be focusing on the role that entrepreneurs have to play and the investment landscape to support this entrepreneurial ecosystem within the African continent. But before we look into the investment proper, let's look at the entrepreneurial part of it. And I guess the first question I would like to ask, just to get the whole thing started, is do you think entrepreneurship is actually the way to go for the teeming African population? And why should anyone actually get involved into entrepreneurship in order to kind of support the developmental agenda of the African continent? I don't know, Selam, you might want to go first.
Yeah, no, yeah, absolutely. I mean, again, like not everyone should be an entrepreneur, right? But to create a sustainable economy, it's important to have sustainable businesses, and that's where you need exceptional, very strong, and very intentional entrepreneurs in the continent. And entrepreneurship by itself is nothing new to Africa. We know this from our, mothers and uncles and aunts who are, selling things and trading since thousands of years, right? So this is nothing new. Like trading is nothing new. Doing business is nothing new in the continent. Maybe the word entrepreneurship and the more kind of the scientific version of it might be something that is catching up with the younger, more educated, let's say, or more urbanized part of the continent. But it's for sure important to promote that in order to create more jobs that are in line with what the economy needs in this day and age, that depends on, or that takes advantage of technology, that utilizes the resources that are there in I guess, in the infrastructure and intra-border payments and all of these new tools that we have at hand right now, to increase the amount of returns and then to increase the amount of jobs that are being created, to then again ultimately to elevate the economy of the continent. So yes, I do believe that that is a path that should be encouraged for the continent now and in the future as well.
That's amazing. I think I completely agree with you. That ties nicely into the popular saying that you should not actually think of what the country can do for you, but think of what you can do for the country. So if we continue to complain about government, bad government, and all of that, we can also ask ourselves, what can we do to utilize entrepreneurship within us to actually drive all of this developmental agenda? Just to tweak this same question slightly, Carole, I would ask, what, in your opinion, do you think that African entrepreneurs need to support this developmental agenda of the continent?
Okay. Yeah, first of all, I also agree that Africa needs entrepreneurs. But I want to add that Africa needs more than ever entrepreneurs with a vision, i.e. entrepreneurs who are really looking to build sustainable businesses that will survive them, businesses that will last centuries. I mean, I'm always amazed when I moved to Ghana and to West Africa to realize that finally you don't see that many businesses that are more than 50 years old. And to me, that's the problem. I mean, we do business, we trade, but we don't necessarily build institutions beyond the people. That's really an ambition and a vision that African entrepreneurs need to have if they truly want to become true champions, the way we see champions in different sectors in other parts of the world. So I believe we need more champions like that, more companies that will literally drive or build ecosystems, lift smaller businesses up, and set the standards for quality, for discipline, for ambition. So yeah, that's what we need, and that's what I'm fighting. I'm fighting for here in Ghana with my clients, telling them, listen, you need to go beyond the easy way, and actually, if you want to attract investments, that's the kind of entrepreneurs that investors are looking for. So the mindset needs to change.
Awesome. I think I completely agree with you on that. The mindset needs to change. We need entrepreneurs with vision, entrepreneurs who understand the continent, the problems that we have, so we can provide solutions and build capacity that supports the way we live, the way our own culture, and all of that. So now I'm going to move slightly away from Africa, but still looking at Africans in diaspora. Right. So there are a whole lot of people here in Cambridge. I've got a whole lot of Africans who got amazing ideas, who we have conversations, and people talk about, look, I have this idea, but if I cite it in Africa, I'm not going to be able to access funding. Some of them have to start up these ideas elsewhere in the UK, US, or what have you. And doing all of that is helping build those economy out there without necessarily making much impact in the continent. So on that note, I wanted to speak to you about what we can do as Africans in diaspora. So for we, the entrepreneurs in diaspora looking to actually do business in Africa, what are the primary areas of impact of business that you think we should actually pay attention to? Selam, you could go for this.
Yeah, no, that's a very important question, and great question to ask now, because we can probably have had this conversation maybe like 10, 15 years ago, right? Because a lot of things need to come in, a lot of stakeholders, a lot of enabling factors need to come to play for an entrepreneur to be successful. I used to be a diaspora myself, moved back to the continent back in 2014. And a lot of the things that I see today in 2021 are not the same at all, 5, 6 years ago, right? So the first thing is there are a lot of changes that are happening in the continent. So paying attention to that is very important as a diaspora, to really foresee which would be the bottlenecks or the gaps that could be filled by someone with an exposure from outside of the continent to come and fill that gap in a kind of commercial way, right? In a business way. To see overall, there's definitely increased number of FDI, let's say, or also even private investment coming into the continent. I'm sure you've heard of the news in the past few months only in the 2021 that there are millions of dollars of investments flowing into startups in Africa, mainly in West Africa, but also East Africa, being Kenya being the kind of the cardinal of all of that. Infrastructure is changing quite a lot. Again, even 5G is now available in Africa. Like this new things that you just think would take a long time are moving faster. So the whole leapfrogging concept is really alive and very well in this continent, which is super exciting, right? So being aware of the developments in that space is also important. The third thing is policies, governments are also turning their faces from, aid or like looking outside of the continent to get support from the Western or I guess the Eastern world as well. Now more looking into themselves and saying, how can we enable our own entrepreneurs, our own talent to solve our own problems? And so this you can see from, let's say, Tunisia to Ethiopia with the Startup Act or Startup Law or Startup, supports organizations that are coming up by both the government and non-governmental organizations that are trying to support this. So it's an exciting place and time to be and to look at. And I think the other key thing would be, as a diaspora, people need to have good connection with a local person who has deep insight in the space. So if, for example, a person is super interested in building a business in the telco space and they're sitting in the UK, for example, then it's so important to invest in a partnership or a relationship with a local person who really understands the local scenario. And then even considering kind of partnership, it could be, co-founding a business together or coming together as partners so that they can support each other, because both can leverage from each other experience and exposure. And maybe to give an example, this is exactly what we tried to do here at Antler, because we're looking for people or individuals, not existing businesses, right? Individuals looking to start a business from scratch, by finding a co-founder with the same caliber as they are, the same passion, the same energy, the same excitement about the same sector. And we actively reach out to get people from the diaspora to come to Kenya, and for us to act as a kind of a soft landing pad for them to find a local co-founder, and then to kind of form teams and move faster, more than it would be if they were trying to launch a business out of the UK that will be targeting Kenya, right? So it's important to first understand the kind of the macroeconomic situations and the progresses that are happening, because important things, infrastructure, policies, and I guess access to finance, who are the financiers, investors that are in the space. And then the second area is the talent aspect, like where are you going to get the right people? How can you find partnership or collaboration or co-foundership? And how can you try and hire locally, so that you can leverage both sides. So I think that's something that everybody who's looking into building a business in the continent needs to pay very close attention to. Again, Africa is a country of 55 countries, and every country is different. So you can't also have the same kind of attitude to each of these countries. So you need very deep insight and local context to each of these countries that you're trying to do business in.
Thank you very much. I think it's really interesting that you mentioned something about the foreign direct investment, the FDI, that comes to Africa. UK, for instance, in 2020, attracted over 15 billion US dollars in funding when you look at trying to fund startups just in UK. But Africa as a continent, the highest report, there are some kind of diverging reports, but the highest among them pegged that amount at 2 billion. Which is still very far compared to what other nations are kind of looking at. So that makes me to wonder, there are a whole lot of drivers of what drives someone who wants to come to a particular country or continent to cite his own company or what have you. If you look at China, what happens in the 1978 when China was probably in the same shoes as Africa? We can sometimes people try to equate both the population, Africa being about 1.something billion by 2050, and China population be roughly the same thing and all of that, and trying to equate that. But it's not the same, because in China, you have that one central government that could control everything that happens there. But in Africa, you have multiple countries that have different trade restrictions, different policies within their own countries and all of that. So even if you want to look at Africa as the single market that you can capture, you still have to face these institutional obstacles within and with that. So that will lead to my next question, and I would like to direct that question to Carole. What do you think are some of the institutional or personal challenges that entrepreneurs should actually begin to anticipate when trying to talk about doing business in Africa or founding their company in Africa?
Okay. I will say three things. The first one is distance. I mean, I think if you want to set up a business in relation to Africa, or like impact African market or do something, related to Africa, I truly believe you need to be here. So it relates to what you said before, David, on which country, because it's 54 countries, each one with own culture, own consumption habits. You need to understand your markets. And I believe that you don't understand your market from the internet or from books. I think you understand your market when you are on that market, when you relate with clients, when you talk to them and you really make the effort to understand. Because sometimes people believe, well, there is a need in Africa, this is missing, this is missing. So I'm going to tap into that opportunity, fill the gap, set up a business to address that particular need, and things should work out. And people are surprised when things don't work out. Why? Because it's not, the thing is, it's not just about having a market. It's having people who are willing to pay for the product or service that you provide. So even if there are so many needs, not all of them are markets actually. And you realize that when you come on the ground, when you talk to people, and when you refine your idea, your business model, and your strategy. So that's the first thing. The second thing people from the diaspora should be aware of, and that's a trap I fell into myself when I moved back to Africa, is thinking that because you are diaspora, I mean, I was diaspora from France, right? I spent 22 years in France before moving back to Africa, to Ghana. You think that, okay, you've been educated, sometimes you've even worked, abroad in Europe or in the US, and you think that actually Africa is waiting for you, right? You have all the skills, you tick all the boxes in terms of fantastic studies, fantastic companies you work in, and therefore things will necessarily work out because you are perfect on paper. Let me tell you something. Initially, when I wanted to come back to Africa, I wanted to move back into private equity. I met a private equity fund in South Africa, and they told me, you're fantastic on paper, but absolutely useless to us. Why? Because you don't know the continent. You don't know Africa. You have the passion because you're Africans, but you've been educated abroad and you've worked abroad. So you don't know the codes here. You don't know the systems here. So in terms of value that you can bring to us as a private equity fund, it's close to zero. But really, you have a nice profile. So that was an eye-opener for me. And so humility, when you come back here, is absolutely critical. Because the continent has changed. Now, the expats that you see for example, at banks or multinationals are Africans from other countries. The expat at Nestle, Ghana, were Cameroonian. The expat at Unilever or EcoBank are from Senegal or from Namibia, or you name it. You see, because actually, even multinationals have realized that the knowledge of the ground, the knowledge of Africa, is actually with Africans who have had work experience in Africa. And 10 years ago or 15 years ago, or even when I was a child in Cameroon, that was not the case. When you were growing in multinationals, you were from the countries of these multinationals. So you are American, French, etc. You don't see that anymore, or less and less. Okay, so this humility aspect is the second thing. The third thing, and that's really about understanding that Africa is way different. Here, sometimes you don't have water, you don't have electricity. How do you deal with business? How do you do business when the simplest thing that you believe are a given don't work? So patience, resilience are critical for survival here. And you need to live and to work with that, and to find other ways, innovative ways of delivering superior works or superior product or services in an environment that are highly inefficient and very difficult. So this is something that needs to be clear and accepted, because I've seen people from the diaspora come and go back to Europe because they just couldn't cope with that, with all of this. You see, so this will be the advice I will make to people from the diaspora.
Thank you so much. I think everything you've said kind of resonates with me. Here in Cambridge, we always have all of this conversation. There are a whole lot of passionate Africans here who would like to contribute immensely going back home. But looking at all of these things you've mentioned, people are really afraid that it's going to be really a muddy water to swim in. And so that would kind of lead me to the next question, which I would like to direct to Selam. The reason I want to direct this to you is that you support early ventures in Africa. So if someone, a diasporan or someone within Africa is even trying to found a business, a company, they are going to be in this early stage because this business does not exist anywhere. So these are the kind of people you support. So we've had all of these challenges. You mentioned some of them, Carole mentioned some of them. How do you think that we can navigate these challenges? What values and knowledge do you think are going to be important in achieving the objective of doing business, successful businesses in Africa?
So how do I say? So having a lot of problems is good for business, right? Because if you solve them, the more you solve those, the more money you make, which is fantastic. But now the question is, how do you get there, like you said? And that's when it requires a lot of the, I guess, the deep insight and understanding of the core of the problems and not the nice to haves. And then having that, as Carole said, the humility and then the humbleness to really start from zero, trying to be more like, have a lot of empathy to understand where really is the bottleneck here. And then having the upper hand in coming up with a solution which is super innovative, that could be scalable. And again, you're trying to do a business, so where people buy you. So it's not, it's not a nice to have solution that you're trying to bring. You're trying to create a business out of the solution that you've created for the problem that is prominent, right? So it's important, first of all, to be very focused. Second, to be able to play in your strength. Just because you're excited about blockchain, you can't just get up and start, a business in blockchain if that's not really the area that requires that kind of solution. So have a deep understanding of yourself and your strength and your passion. What am I good at? What can I do? And then having very strong emotional intelligence to try and attract somebody else who's also as excited about this as you are to work with you on this, right? So it will be very difficult to build business by yourself in this continent. We've said it a few times. I guess at this point, everyone knows it's not an easy place to do business, period, right? But having that, knowing your strength and understanding what the main problem is, and then coming up with various options as a solution and not just sticking to the first one that you thought of, and trying out in the market to see, are people willing to pay for this? How much? Who's your target customer? Like, where can you deploy this? Because again, different countries, even different cities have different kind of customer personas. So to really having that deep understanding of the market will make you move much, much faster than like a multinational trying to deploy a franchise model and launching a business here. We've seen that happen with really, like, with so many different businesses from outside of the continent, or trying to build a business like that here, and it failed. So the core of it is really understanding the kind of the gap, and then using that exposure that you have from within the continent outside to apply that here with people who are local as well, so you can work with them together, and you have very deep understanding of the market. I think that's super crucial in the early stages. At least that's what we encourage to do with our entrepreneurs, and that's what we see as well. Some things that take you 3-4 years might be, in 2, 3, 4 months, you can really reduce the amount of mistakes that you make by being extremely strategic about how you go about solving the problem and understanding the market faster.
Okay, thank you very much. Just to remind the audience, keep sending in your question. 30 minutes from now, I'm going to start looking at questions from the audience. So we're going to have more of this conversation in 30 minutes, then we'll start looking at the question. So the next thing I wanted to look at is, maybe Carole, you could help us out with this. I have a friend who I was kind of speaking to about moving his company to Nigeria. And he did mention something. He said, this is something that when you go back home, you're going to struggle with. That's because you have a whole lot of business people who go to China, produce all of these things, bring it in, and then you find it difficult to compete with all of these people, right? And then London School of Economics have a recent report where they say that savvy Chinese private companies are venturing into Africa, not because they want to develop Africa, really, but what they wanted to do is to continue to export China's business models, their intellectual property, their technology platform, to fit into this emerging market, so that they can further strengthen their own home and their own economies of scale and all of that. But if you look at Africa, you've seen that there are a couple of startups that have actually made it, really. Okay, so for instance, SendWave, $500 million purchased by World Remit. Network International buying DPO Group for about 288 million. Then Stripe's larger than 200 million acquisition by Paystack, and some other high-profile examples of success stories that have actually taken place in Africa. So the question is, in spite of whatever challenges we have, there are still people who are making it. So if you look at the journey, in spite of all of these challenges, what do you believe are the existing opportunities? How can we navigate and replicate the success stories of some of these people so that we are confident that we can do it because some of these guys have done it?
Okay, so the first thing is to me, right, is to define what a success story is. Because in terms of what you just described, you're absolutely right. These are great deals, right? That were signed and closed, and people made millions, and that's great. Now, right? Now, these businesses have been bought by others, right? So either the success story is about, okay, I'm building something that will be great, that will be scalable, that will have let's say impact, yes. And at some point, it will attract the interest of larger businesses who will buy them out, these businesses, and I will, as a founder, I will make millions, right? This is. I think it's fair. It exists everywhere. Now, my point is, where are the buyers? Where are the African buyers? Where are the African SAP, Coca-Cola, Unilever, you name it? That's what. Because to me, the thing is, I believe that. I strongly believe in SMEs, in businesses, to actually generate the jobs for the African youth. But these businesses need to grow to the point where they also become giant. A continental giant means a company that serves 1 billion people. I'm not talking about a great business that will reach a level where it's bought out by SAP or Microsoft. Great for founders. But what about the story of actually building African giants? Okay, we have MTNs. Great. How many MTNs do we have? Right? So to me, it's really, okay, be true to yourself. What do you want to achieve? What is success to you? And I don't judge success here. If success is about building a business that will sell and you pocket money, it's absolutely fair. There is no problem with that. But it needs to be clear. If you want, on the other hand, to build something different, then it will take more time. It will take more time. I still believe that you need to be on the continent. I believe that it could be extremely diverse, and technology can be a way to leverage and improve and become more efficient. But I also believe that we need agro-businesses, agro-processing companies. We need manufacturing companies. I mean, we haven't seen any country, any continent growing without an industry. So really, again, I'm not saying technology is not good. Technology can enhance, but I don't believe it can replace what is needed. We've seen in every country in the world a strong industry, a strong agriculture, mechanized, industrialized, with added value. We need to add value to whatever we do. That's not the case today. And we can do that in so many different sectors, right? Using technology as a way to become even more efficient. But these are the sectors, I believe, that will create employment, right? When you have workers working on production lines, people working in fields to grow food and then process that food to add value and then serve the local market. I mean, serving the local market in Nigeria means 200 million people. Okay, so you do Nigeria plus West Africa, it's like the US. Okay, you add Central Africa, East Africa, I'm sure you've all known, you all know the fact that you put China, Europe, everything in Africa. So this is a huge market. This is a huge market. So the success, absolutely. But what is success to you? Be focused, whatever it is, the story that you want to realize or pursue, be focused, be realistic about the difficulties that are ahead, right? Be resilient and fight. But yes, absolutely, it's possible. Will it be easy? Absolutely not. Absolutely not. I've been in this country, in Ghana, for 10 years. I have a Ghanaian friend who told me, you know what, Carole, you will struggle. You know why you will struggle? Because you're a foreigner. And because people have seen too many people come and leave. They want to see that you will stay. The moment they see that you are here to stay, all of a sudden you will see things will change. That person was so right. Things started to change for me last year. I set up GFA Consulting in 2011. So it's about what you want to achieve, not underestimating difficulties, but being ready for them, whatever they are, and being focused to realize whatever dreams you want to realize. And it will take time. Time is not your enemy. It shouldn't be your enemy. Don't think about rushing and things should happen in 2-3 years. Not necessarily. But that's fine. That's what this whole journey is about.
Okay, thank you very much. Selam, I'm going to come back to you. But before then, there's something I wanted to follow up with Carole on. So, Carole, do you think that Africans building businesses, building startups, and then exiting for a kind of a large paycheck for the founders, in which foreign partners have to come in and buy those firms, do you think is doing us more harm than good? The reason I wanted you to use the typical example of Paystack while you are answering this to answer this question. Paystack wanted to expand their API to other African countries, okay, and they needed about $600 million to do that. So when Stripe came in, they agreed that they were going to, in addition to help Paystack expand into these various African continents, they are going to pay extra $200 million. So even though we see it as the acquisition was $200 million, the acquisition was really, if what is going to take to actually expand to other African countries is 600 million, then the acquisition could be tagged 800 million actually. But I'm very sure that these guys wouldn't have had that money. And you mentioned something that is striking. Where are the Africans who've got money that could actually purchase all of these things and make sure that the roots of whatever company it is within? So do you think that foreign partners coming in to acquire all of these African ventures and startups, do you think is doing us more harm than good?
Only time will tell. Only time will tell. I mean, I've seen. I mean, I cannot. Yeah, why not? Actually, I've seen a company like Decathlon. You know, Decathlon is a French company. They are into sports items. Very good business. They expanded in Africa. Okay, they expanded in Africa, opened in Côte d'Ivoire, Ghana, and I don't know which other countries. And then COVID came, and it's a multinational. I mean, at the time when they expanded, obviously it was creating job locally, creating opportunities for local consumers. But then they decided that actually, in terms of strategy, Africa was no longer a priority. So they shut down. Decided to shut down. So it's always a possibility, right? When you are a subsidiary of an international company, right? The probability of Decathlon closing in France is really, really small. But right now they are closing in Africa. They are, not only Africa actually, they are also closing in Australia, in some part of the US. So it can happen. That's the danger to me. When it's too much about selling to external companies, to foreign companies, because then it becomes their agenda, which is absolutely fair. What about our agenda, even our business agenda, right? So it's true, yeah. In the example you mentioned, yes, it's going to create opportunities in all these other countries where the company will expand. I just hope that these opportunities will last. That's my only hope, because we see that too often. We saw that in banking, we saw that in oil and gas, we saw that in retail. We have ShopRite, South African business retail. It's a big supermarket chain. Opened in I think it was in Nigeria, but then they closed. Or I don't remember. Sorry, I don't remember the country. But you open, you close. You open, you close. It happens. I would love African multinationals to be in that position. I would love these small businesses to be bought out by African multinationals. That's it. Now, the market and the system is what it is today, and I'm not going to say, well, it's bad. I can't say that. Now, is it sustainable? To me, it's a question mark. I don't have the answer. But we've seen examples of just agendas changing because of new environment, new priorities. It just happens. So, what are the consequences when it happens to a continent where you don't necessarily have the level of industrialization or the level of flexibility in the job market that allows people to find job easily, right?
Yeah.
So that's a question. Don't have the answer.
Awesome. So thank you for that. Now I think I can move to Selam. I'm going to start with you. Probably, Carole, I'm going to come back to you to also provide answer to this particular question. Then before we can go to the audience to start taking questions from them. This is from the investor side of things. We've been exploring everything that is happening from the entrepreneur point of view. But now let's look at the investment side of things. You run a private equity firm, you provided financial advisory, you consult, you do all of that with respect to Carole. And then Selam, you yourself, you support early stage startups, entrepreneurs, and all of that, provide them with funding. Now, the question is, I'm very sure that it's not every pitch deck that comes to you that you fund. There are things that you are looking as an investor. Probably looking at the market you're trying to capture, looking at the scalability, looking at the team, looking at the idea itself, looking at the exit point. Because as a venture capital firm, you want to start up to exit so that you can return money for investors and all of that. So what do you think? What are the things, looking at the success stories of the people you've funded and the people you've not even funded, but other kind of VC and venture capitals have kind of funded? What are investors actually looking at when they want to fund an idea?
Yeah, so for the stage that we are in, because it's super early stage, right? So most of the startups that we've invested in, they don't even have the business, outside of a PowerPoint presentation. It's literally like the first 2-3 months of their ideas and the potential of the idea that we invest in, right? So it's super early stage, and it's different at what stage you come in. But for us, the first thing is the founder. Like really, the whole investment thesis for Antler at least is find exceptional individuals that could solve problems and then invest in them. So that we really are looking for those kind of people. And then the team, that is what makes us kind of say yes or no. Then the argument for that is, if these are exceptional individuals, they have super solid chemistry and complementary skill sets and are going after something that they're passionate about, chances are they'll figure it out. And they need a lot of support, of course, again, because this is super early stage. But we're happy to take that risk, invest in their potential, what they can do. But for the most part, team is one thing and the kind of skill sets that they have. The second thing is the idea itself. Are they going after a big problem that, if solved, could be big? Like as Carole was saying earlier, like, can this be $1 billion business? Can this go into multiple countries across the continent? Can this become the next, Amazon, the next, I don't know, the next big multinational that we can think of? Can this be at that level where we can unlock a whole new sector, a whole new industry, a whole new kind of side of the business and employ a lot of Africans in this business, right? So like I said, the three areas, the overarching areas: the team, the founders, the idea itself. Is this big enough? Is this a big enough problem? Again, like we always say, don't fall in love with the solution, fall in love with the problem. So have they fallen with the right kind of have they fallen in love with the right kind of problem that is big enough that needs solving? And then solution wise, have they come up with a solution to really solve that problem? Is it a painkiller versus is it a vitamin pill, right? So are they really trying to disrupt it, like that space, or are they coming up with, oh, it's a nice to have solution that doesn't necessarily get rid of the actual core issue there? And then what's the commercial side of things? How big is this market? How fast or how soon can this scale? In which geographies? Why? What's the kind of competitor landscape like? What would make this guys very different and unique and very African? And then ultimately, we also handhold quite a lot. We're not going to give them money and go away. So we continue advising them as they continue building their businesses. But I guess the three things would be the team, the idea itself, and then the solution, and then the market, I guess.
Awesome. So, but before I go to Carole, just out of curiosity, I know that your firm, Antler, has a presence in Europe, Asia, and North America, but in Africa, you only have presence in Kenya. Is it a strategic decision, or are you looking to also move into other African countries?
No, we will definitely expand to the other parts of the continent. Kenya it just made a lot of sense. The team, we were based in Ethiopia / Kenya. So, and then the ecosystem here is easier. The model is more robust. And then the model is to bring a lot of Africans or people even from outside of the continent who are interested in building a business in Africa. And so if you think of that kind of logistics, visas are not hard for other Africans to get, versus if we were to put this in South Africa or Nigeria, for example. Kenya is much easier to travel for other Africans. And then I guess infrastructure policies that are also much easier to set up a model like Antler that requires a very short amount of time from going from meeting your cohort and then forming a team, building the idea, and then pitching to the IC, which is 2.5 months to 3 months. So that's why we chose Kenya. It was just very easy to kick off the model that we had in other locations. However, we are definitely looking at the other parts of the continent as a future expansion area. But just the number wise, like 82% comes from all over Africa. We have 14 nationalities in the cohort. So although we are based in Kenya, we do get a lot of people from West Africa, South Africa, and even Central Africa.
Okay, awesome. Thank you very much for that. Carole, over to you now. Just the same questions. What do you think investors are currently excited about when it comes to funding African business within the African landscape? But this time, although you can look at early stage startup, but if you can stress a whole lot on what private equity firms kind of are looking at, that would be great.
Yeah, actually, I work more with private equity firms than with VC funds. So I will say from the business point of view, I think private equity funds look at 4 different things. The first, obviously, because they're private equity funds, they want to work with existing businesses. Actually, minimum 3 years of operations and 3 years of audited financial statements. So the first thing they will look at will be the systems and processes in place. The quality of systems and processes are critical. We're talking here about the way cash is managed, risk management, and how financial information is produced, right? That will give them an insight on the quality of the company. The second element will be governance. You know that Africa, unfortunately, suffers a bad reputation when it comes to governance. So, so that one. At the same time, we are in a time where ESG and impact are actually key elements that investors look for. They want to make sure that their money is used for the greater good, and the money is used for impact. So governance becomes central, extremely critical for private equity funds when they assess an investment opportunity. The third thing, and that's the same as VC funds, is quality of teams. Obviously, it's much easier for PE funds to invest in a business with a strong team than in a business that relies exclusively on one person. And then the fourth element will be the credibility of the projects for which the company is looking to raise funding. And that has to do with what is the unique selling proposition of these companies? What is the market like? What is competition like? What are the barriers to entry? What are the key drivers of the market? Everything around the projects for which the companies want to raise funding. That's what relates to the business. And then there is one other element that relates to the transaction, and that's the exit. PE funds absolutely needs to know what will be the exit routes for the investment. Today in Africa is essentially trade sale, so they sell to a strategic buyer, somebody in the same a company in the same sector or activity, usually foreign companies. Then you have secondary, like selling to another larger private equity funds. IPOs are less common because markets in Africa are less liquid, but there are opportunities for some businesses to list in London, on the London Stock Exchange. So, and obviously the Johannesburg Stock Exchange is a bit more liquid than other stock exchanges in Africa. But essentially, it's essentially trade sale and secondary today. But exit will be absolutely critical. So that's what they're looking for. But apart from that, then there are some sectors today with COVID that the private equity funds are really fond of, and that would be agro-processing. That will be industrial manufacturing, because people now realize that maybe it's a good idea to industrialize Africa. So this is something that they're looking at, which was not the case 5 or 6 years ago. Anything green, anything that mitigates the impact of climate change, especially renewable energy, is extremely popular right now. And obviously, technology as a way to enhance other sectors like education or healthcare. And transport also. Transport and logistics is very popular. So that's what I could say about what PE funds are excited about these days.
Awesome, thank you very much. It's been an interesting conversation with you both. I would have loved to ask a whole lot, but I wish to take this conversation to the audience. And the first question I would like to bring up, probably Carole, you could take on this. You did mention something when I asked the question about diaspora and then coming back home. You mentioned something about having the local knowledge of the country where they are coming back in order to fit it and be humble and be able to actually carry out whatever it is, the business they are bringing and be successful in the long run. So do you have any guidance? Someone is asking, do you have any guidance for diasporans on how to actually build that local knowledge?
Well, if you want to set up a business in Africa, or any business for that matter, it means that you need to take a risk and you need to invest, right? So I will advise at some point to start, have a plan to move back. Maybe it means looking for a job first, just to be on the ground. And to mitigate your risk. If you have savings that can help you live maybe for 6 months or 1 year, try to come maybe leverage on your strengths and become a consultant, for a period of time, just to get to know your clients, to know the kind of needs they express and they're willing to pay for. That's what I would advise. I mean, to me, I didn't have much money when I moved to back to Africa. So for me, consulting was the obvious choice because it doesn't require huge investments. You can work from home, and so you don't need to spend much money, and it helped me to spend time spending very, very little to understand my own market, right? To understand my clients, and I made mistakes. Even in terms of advisory products, advisory services that I was offering to the market. But the risks were limited because consulting doesn't cost money to start. Obviously, for you to start a business in manufacturing or in trades, even trades, it requires more investment to start with. So you can save for that and take the risk. And be mentally willing to take that risk, which means accepting that you may lose that money, right? You will gain that knowledge, but you may lose that money. So, like becoming an entrepreneur, from like a real entrepreneur, so somebody who takes risk and who can win or lose. And that's what I can say. But yeah, try. And if you really you don't want to take that much risk, then try to find a job. But when you try to find a job, be realistic on the level of salary you get, right? Because even if you join a bank in Ghana, an international bank, you will be paid in cedis, not in dollars. Okay, so you need to accept that, which means that you need to live with the salary in cedis that you have. That can be a big game changer, when you're not you're not used to that. Don't convert in pounds or dollars or euros. You can get a stroke. So just think about how you can live locally with what you have, and things will be better. Yeah.
Awesome.
I hope it helps.
Yeah, thank you for that. So I guess now the next question, although this is specific to Uganda, I hope you could, I don't know if you have experience trying to fund startups or businesses in Uganda, but this person is saying for countries like Uganda, where the dictatorship is deeply entrenched, what advice do you have for young Ugandans who would love to start business in such a country? I don't know. Any of you can take on this. I don't know what background you have to be able to answer this.
So the question is about how to set up a business in an environment when you have dictatorship.
Exactly.
That's what you mean, like Uganda, Cameroon, Chad, wherever. Wherever. Okay. I think even in Iraq today, I'm sure, even Syria, I'm sure they have businesses there. I'm from Cameroon, right? In my country, there is a dictatorship. I chose not to go back to my country because I knew I couldn't cope with what setting up a business in Africa, in Cameroon, and surviving in that environment means. It means, to be very simple, paying. Okay, you pay, you get peace. Now, would that make you a very successful business? Not necessarily, but at least you get peace. So some are happy to play by these rules. Some are less happy to play by these rules. I was not comfortable playing by these rules, but that was me. I know others who are fine, and they're surviving very, very nicely there. So it's really, you look at yourself in the mirror and you think about, okay, what is my limit? What is my limit? Really? And am I ready to go? I'm not ready to go. If you're not ready to go, then you do a country due diligence. That's what I did, to find the place in Africa where I will feel more comfortable giving my systems of values, my limits, and other considerations, personal considerations like family, opportunities, etc., etc. So Africa is very diverse. You can find the country that corresponds to what you need and what you want. I believe that you don't necessarily need to go back to your own country. You see, so yeah, That's what I could say.
Okay, so I guess we can take the next question. This has something to be tied to cryptocurrency. Someone has said that Account cryptocurrency, which was launched in Kenya as a pilot for Account City, then again November 2020. How can technology enthusiasts work with local real estate entrepreneurs to emulate this kind of success?
Sorry, what's the question? How can they leverage on crypto? Or
How can people who love technology work with local real estate entrepreneurs to emulate this kind of success story?
right. I mean, I guess we go back to what we've been saying, right? First, come here because that's where you would get to meet these entrepreneurs who are looking at the same things that you are looking at. Have an understanding of what's allowed and what's not allowed. Especially the crypto space is pretty vague right now. There's a lot of development there. At the same time, it's not clear whether it's allowed or not allowed yet. In some countries like Nigeria, for example, they just blocked any crypto, I guess, currencies and exchanges. Although there has been a lot of development and progress in that with startups who are trading in crypto. Kenya is still open-ish. It's not open, it's not closed officially. So people are still trying out few business ideas. We even have 2 startups in our cohort that are looking at that space. But again, it's a new space. There isn't a lot of clarity as to the future, whether this would be allowed or not. But my recommendation would be you would make contact. You need to make contact with the local entrepreneurs or the local people that you want to work with to try and come up with the viable solution in the space that you're excited about. So I think it might be pretty difficult to try and do this from remote, at least in the beginning.
Thank you. I think just to add to what you've actually said, when people talk about cryptocurrency, they focus on that. But I think what is more interesting about this is the platform where these things are evolving from, which is the blockchain technology. So if Africa can actually start looking in that direction, there are a whole lot of utility of blockchain technology. It's not just about crypto trading and all of that. So
Yeah,
we can
absolutely.
use it.
Yeah. I mean, I don't know if you guys have heard about this new. The Ethiopian government had just signed, I think, an agreement or contract with the Cordano to work on a blockchain for education, for example, and it's apparently one of the biggest projects of that scale in the continent, if not ever. I'm not sure, but there are those kind of projects that are coming up in the continent that are super exciting. Again, that's going back to the kind of leapfrogging space, which is super nice to be in this position where you can go from zero to like now joining the latest kind of technology that is out there. Again, the NFT space is super exciting. Another company that, and again, sorry, I'm Ethiopian, so I know a lot more about the Ethiopian side of things, but an artist sold her images and videos for $11,000 on NFT just last month, or like earlier this month, actually May. So there's all of that and excitement around the applications of blockchain and I guess in general the crypto space. So there's that excitement is there. No one knows because it's new, and even if legislators are trying to understand how to kind of navigate this, but for sure there's a lot of movement coming out of the continent, especially in the eastern part of the continent, now that Nigeria is blocked, unfortunately. But yeah, I'm sure they would allow it soon.
Yeah, awesome. We are looking forward to the future of blockchain. I don't know for cryptocurrency, but I'm very sure that as more customers, more consumers want to take control of their data and the things they do, instead of leaving it in the hands of government, decentralized platforms are going to be a thing going forward. Okay, so the next question, I don't know, maybe Carole, you could speak on this. The person have asked, why do the financiers, e.g. banks, equity firms, and all of them, mostly focus on funding IT or tech-related startups and not infrastructural or agro-related startups?
Okay, banks don't fund startups. Banks are the most risk-averse people on earth. So they don't fund startups to start with locally. No, actually, when it comes to businesses, there are different problems here. It's not about the sectors. It's except for technology. Let's say I'm going to focus on banks specifically. Banks don't fund technology because they don't understand technology, and I'm talking about local banks, right? So that's it. And often technology comes with startups, and they don't fund startups, whatever the sector. So having said that, banks locally tend to prefer larger companies than SMEs. And that's the big challenge that we see on the ground, is the fact that SMEs, and by SMEs I mean a company that is making, let's say, between 700,000 and $5 million revenue, and that is looking to raise between $1 and $7 million, that company will struggle to get access to funding from local banks. Why? Because local banks prefer to fund trade. Okay, so you buy and sell, that's what they like. They prefer to fund multinational or subsidiaries of multinationals. So they're all fighting for a very limited number of companies locally. And all the hundreds of SMEs that are looking for funding will not be funded. They have, for me, it comes from two factors. First, the fact that they don't know how to assess credit risk properly, because they focus on getting collateral from all these businesses and not necessarily understanding the fundamentals of these sectors or of these companies. And secondly, it also comes from the fact, and we need to accept that and realize that some businesses, when they get funding, when they get a loan, they don't see the interest of paying that loan back. Or they would rather use the money to buy a new 4x4 car than to put that into the business. And that's true, that exists. And the problem is, when you are a bank and you see an SME, you don't want to think, is that SME different from the one I usually see? No, it's an SME, so governance is poor, so it's risky, so I don't fund, period. Which leaves great opportunities for private equity fund. But the problem of PE fund is that when they invest a lot, they will invest in what? 3-4 businesses in a year? In terms of impact and access to funding at the level of one country, a country like Ghana, it is nothing. So you will always find these businesses that are struggling to get funding. And these businesses, they are in all kinds of sectors, right? Infrastructure, when the person mentioned infrastructure, tend to be something that is more government-led, where you have specialized funds that will invest in that, like the funds the funds/banks who funded the new airport of Accra, or the port in the extension of the port in Tema or Takoradi. Fine. This is where the DFIs will fund. But when it comes to private businesses, there is absolutely no discrimination. Any sector, whatever the sector, the SMEs will always struggle to get access to funding, and that's a fact, unfortunately.
I can see that.
Yeah.
So yeah, I would take this to Selam. I want you to come from the perspective of a venture capitalist. I know there are different VC firms that target different sort of startups. Some tell you that, okay, we're just focusing on biotech. Some said on things that are sustainable and all of that. So could you tie the reason why VC firms go to a particular area like IT, tech related and all of that, instead of these other ones like infrastructure and agro-related startups?
Yeah. I mean, I guess the short answer is, like, scalability is super important for venture capital firms, or at least we're looking at quick growth kind of paths, right? And the kind of businesses that we're looking at need to show kind of tremendous kind of growth in a very short amount of time. And to be able to do that, tech is a great enabler. A lot of these ideas that don't necessarily require massive infrastructure, for example, or manufacturing or agriculture for the sake of that, it's not very manual. And we like businesses that disrupt those massive sectors using technology. to increase the kind of returns, also the time span for the returns to start coming up. So it's not that we don't want to invest in agriculture or infrastructure or logistics. The way we invest in those is if it's a solution, a tech solution that could enable faster logistics or better farming or better kind of yield, then absolutely that's down our alley as well. But then not necessarily something that requires a lot of upfront cash that will take so much time for it to be developed. I think that also will be limited by how much you invest, right? So every VC has different ticket sizes, as I was saying earlier, or different stages. Example, we come in early stage, we invest $100,000. With $100,000, what can you do? You can't build a factory. You can definitely not have a mechanized farm. You can definitely not have a massive logistics company that needs tens of hundreds of trucks that for this business to make sense, right? So then we look at the idea and say, what can you do with the amount of money we give you that could give a high return in a short amount of time? And then that by default kind of gets rid of a lot of the manual, a lot of the high capex business ideas at this stage.
What's your definition of a short period of time?
3 to 5 years would be what we would look at least for our case. For the most part, most of the ideas start making money like in the first year or so, at least start having revenue, maybe not a profit. So then this kind of makes it very narrower, and then you would end up with either a software or an app or kind of a small hardware that could be plugged into a kind of a software that enables it. So kind of tracking, for example, that could support like an infrastructure industry, like an industry that's heavy in infrastructure. Just an example would be, we have one company in Sweden that is a drone that monitors power cable lines, whether they're faulty or not, or if the cables are about to go bad, or if they're about to get ripped. And that saves so much money for the power companies, because they wouldn't know until this thing is broken, or it could be in the middle of nowhere that the line is cut or a pole has fallen down, right? So it's a very innovative tech solution for a very hardcore hardware, high capex business, and or a software that matches influencers with big brands, so that instead of them going out finding one agent after an agent to try and find the right kind of channel to advertise, and this algorithm or the system can tell them these are actually the right kind of people you need to look into. So this is what we mean by kind of highly scalable tech-enabled businesses, and it could be applied in any of the industries that are out there. But I guess the determinant is how much money are you investing. Yes. Typically in a VC space, like the ticket sizes are much smaller, so you tend to invest more on software kind of things or tech business ideas than hardware or high capex business ideas.
Okay, we are already approaching time, and so I will just take one more question. But before then, there is a short question. Carole, probably this is coming from the response you've given. Someone has said, in addition to the question which you've looked at with respect to funding tech and all of that, what is the best funding option for small and medium enterprises?
Okay, so are we talking about tech SMEs or any other sector?
No, generally, any of them.
Generally? Okay. Yeah. So today you have many funds, private equity funds looking at Africa. They're not necessarily based in Africa, and each one of them has different investment criteria. So in terms of location, what kind of region or country, sectors, obviously, ticket size. So you have those who will invest less than $1 million in each company, but minimum, let's say 250,000. Those who will do it between 1 and 3 million. Those minimum 5 million, and even some at 20 million plus. Generally, all these private equity funds, they want to be minority investors, which means that it informs you on the size of the business. Because if you invest $20 million, $30 million in the business and you are a minority, then it's quite a large business we're talking about. Other elements that you should consider, other investment criteria are the structure of funding. Is it a debt, equity, or a mix of both? Now you see more and more mezzanine funds coming in, looking at Africa, especially post-COVID, because they see that banks who were risk averse are now turning completely paranoid, so they don't fund anything anymore. And so now even the debt, you see foreign mezzanine funds creating a pocket for Africa, and you see funds that were only doing equity now creating sub-funds who will only do that. And I've seen 2 funds like that who set up this new, let's say, debt funds in the past 6 months. So this is also something to consider, and obviously the maturity of the business. As I said, minimum 3 years of operations, and then you can find whatever. So today, when client comes to me and they have at least 3 years of operation, I will find investors that correspond to who they are and what they're looking for. And in some situation, if they are, for example, too small and they want to raise like 5 times or 10 times their revenue, I will tell them, well, it's not credible. We don't even need to go into thinking about your business plan. You need to scale down your requirements, your needs, because there is nobody that corresponds to who you are. You cannot have $1 million revenue and raise $10 million. It doesn't exist. So either you start with the first phase at 1 million or 1.5 million, let's say maximum 2 million, and we build on that and we develop a business plan for that. And then you consider that you will do another fundraising after 2 years or 2 or 3 years for an additional, I don't know, 3 million if you meet some milestones. So there needs to be a correspondence between who you are, what you want to do, and the kind of investors that you will look for. But I will say that there is an investor for any type of credible business today.
Awesome. So I still have like 30 seconds. I don't know if we'll be able to take this question in 30 seconds, but someone seems to believe that one of the primary problem of economies of countries in Africa is debt that is being created by people who are financing business. And the person is asking, how can one hope to solve this problem?
Are we talking about debt? Sorry, maybe Selam, you want to go?
Yeah, I don't understand either. No. Yeah, I don't think I have the answer for that.
Yeah. I mean, at macroeconomic level, absolutely no answer, right? But the only thing I will say is today, so many SMEs believe that debt is the only option for them, right? And I spend a lot of time trying to explain that you don't need to go into debt. Equity is also an option, but it comes with a price, and the price is being more structured, sharing more information, and giving up part of your control. If they're fine with that, then equity is something they can consider, and it can solve that issue at micro level. But at the level of countries, listen, no idea.
I would have loved to take more questions, but we are already behind. Okay. You're already behind time. So it's been an interesting conversation with both of you, Selam and Carole. It's an absolute delight to have the opportunity to engage you guys on this very conversation. And so I'll just give you 20 seconds to wrap up your view. What is your advice going forward when it comes to the investment landscape in Africa? What is the take-home remark that you would give to our audience?
Come here and be ready to fight.
Yes. If you really want to do that, yes, exactly. Just come
Absolutely.
through. We're here to work. Yeah, be ready.
All right,
to fight.
guys. So you've heard it. Come down there and get ready to fight. All right. So it's been absolute delight to have all of you. So we are going to take a short break, and by 2 p.m. prompt, we are going to come back for the second panel. And so just take this a couple of moments, engage each and every one of the participants that we've got here during the networking section, meet people, connect with them, follow up on LinkedIn and all of that. And don't forget to tweet whatever it is that impresses you during the conversation with our hashtag AT2021 or hashtag Strides of Change Africa. So see you guys in 6 minutes. Thank you.
Thank you. Bye. Bye-bye. Bye.